We
Okay.
can hear you
Nice.
well. Beautiful day here in Miami,
Snowy
and
day in here in Montreal.
so so we're back, bro. Every week we're gonna be back every week on Sunday. Our Market Bros podcast. We took a little bit of break. We've been too busy trading, but bro, can we talk about
I don't even know
what
where to start.
what a crazy week? And we say this every week, and I get it. It almost feels like every time there is a major trade, we're like, oh man, what a crazy trade. And then a week later, there's another trade. And a week later, there's another trade. You cannot have FOMO in these markets, bro. It's like there's a big trade every week. It's crazy.
Yeah.
Um, but we are right now. The government. There continues to be a government shutdown. There is no data. It's crazy how the markets just got used to the idea of not getting any data. It's like anything happening today. No, I mean, aside from the private reports like ISM, ADP, etc. It's almost like 8:30 a.m. every day. We were like
But it's
trading
kind of fun.
futures, strategizing, be like, oh, retail sales, durable goods, non-farm payrolls, initial claims. All of this data, and all of a sudden it's like, oh, there's just no data. We're just gonna go by some
Technicals.
of these private indicators, and I'm sure everything is
Seriously,
okay.
Challenger job cuts became like non-farm payrolls for a
And bro,
week.
how crazy? Because I mean, the Challenger jobs report. I mean,
Whenever did
that
you look at that?
never. I mean, never. I've been looking at that indicator, but never cared about it. And I would never even trade off it. But it almost feels like they had their moment. They had their moment. Challenger layoffs comes out and
Seriously.
says this is the most amount of layoffs in 22 years. And we are now starting to see AI take over. It's almost like they had a meeting that morning or the week before and said, guys, it is now or never. Nobody ever looks at a report other than
Seriously.
economists and analysts. It's like traders don't care about it. They always go to take a bathroom break or for a coffee whenever the report comes out. Nobody cares about Challenger layoffs other than economists.
Bro, nobody
And
brought their lunchbox that day, bro. Everybody went out to the restaurant, bro.
I know, and they're like, okay, how are we gonna make it our day? It's like, well, 22 years, the highest levels. Let's do it. Let's give it an AI spin-off, and let's spook the markets. And the markets got spooked. But before we get there, and let's start sharing some charts. Um, and bro, I mean, what a week! And let's just get started with one of the best calls we made since
Controversial,
the,
bro.
since
You
the
gotta
top
you gotta say controversial call.
since the
Because
top.
we're going against the trend.
I know. So let's go back, bro. Let's go back to this day. You remember this day perfectly. The end of 2021, right? And if you remember correctly here, the market had rallied all of October relentless. This is 2021
Yeah.
after the Fed had been leaving rates at extremely low levels longer than they should have to kind of ensure that the post COVID recovery didn't lose steam, right? And this is now 2 years after COVID ended, and the Fed was still printing money. The Fed still had low rates, and the markets were just loving it. They were loving this post COVID recovery, and the markets were just ripping. And in December of 2021, the Fed had warned that we were going to start getting rate hikes. Next year, the following year. And this is after the Fed promised that they would keep rates unchanged or at zero until 2023, until the end of 2023. And then they
Oh
kind
my
of
God, I
flip flop
remember.
around. They said, well, actually, we made a mistake on inflation and it's not transitory. That was the first sign. Inflation is not transitory. And then nobody cared, like nobody listened to Powell. the market kept on rallying and rallying and rallying. And then Powell had to be a lot more specific and say, we're gonna have, we're gonna have to start hiking rates. I mean, he indirectly say that, and the markets were already starting to price in rate hikes, but we were at highs at the end of the year, and then kaboom! All of 2022 was a bear market, and a pretty nice Fed rate hike sell-off. And you had those crazy squeezes, right? Like, let's not forget these, like, what were they, like 16, 17% squeezes all of 2022, which made it very, very painful holding through that big downtick. And then eventually we broke out of that range and we went long. And we've had this beautiful, beautiful rally heading into the Trump election. Then obviously we had this whole sell-off on tariffs, and we thought we had broken the trend line, and we did have a pretty nice. People forget that, bro. 26% sell-off
That's a lot.
at the beginning of the year. And I meet a lot of people and they're like, oh, a sell-off is needed. I'm like, bro, like a few months ago, you had a beautiful 26% sell-off. And most people didn't get on it because it was very scary from a technical perspective and also from a fundamental perspective.
Every time the market makes a new highs, you always see that the market needs, yeah, but it just did.
Exactly. So then we went long here, the market rips, and we knew, bro. We knew that it was going to get to the top of the channel, and we had a checklist. And one of our checklists was there should be no war, Israel, Gaza, Israel, Iran. There should be most of the Magnificent Seven should be at all-time highs, including Apple. We should see a big rip in Google. We saw it. Microsoft, we saw it. We said Apple needs to be at all-time highs. It happened. Then we said there should be all these trade deals taking place, and they happened. Whether or not they're real, that's a different question.
We wanted NVIDIA to hit the magic 5 trillion valuation.
And that was the key, right? I wasn't comfortable shorting NASDAQ until NVIDIA got to that $5 trillion valuation. And also, part of our checklist was a meeting between Trump and Xi. I needed to see that picture. I needed to see them meet up, and I needed to see that the US and China were gonna get along, at least for now, right? And whether or not it's a trade deal or a trade truce or a trade truce extension or whatever, I wanted to make sure there was no trade war escalation, right? So all those things happened. They really all happened, right? I mean, we did put in there like there should be no war between Russia and Ukraine, but I mean, does that even really matter? I mean, from a market,
it's not market moving anymore, man.
I mean,
it's
from
been
the
going on
market
for so
perspective,
long that
yeah, the markets are used to it, right? So, and that almost happened. I thought when Trump met with Putin, I thought that was it. But obviously, Putin now is playing its cards and trying
Putin
to
and
get
Trump
more.
met, so I think that like put the pause on like we need to stop the war for whatever reason.
Exactly. But now everything that we said was gonna happen happened.
Yeah.
And we were long this whole thing. We were long NVIDIA. And this trade on NVIDIA was beautiful heading into our short.
And we're especially long on that crazy sell-off on a Friday.
Oh my God, bro.
Apparently,
bro, this is the first time this week I really pull this is the first time that I pull out this chart again on the dailies, because I've been looking at too much short intraday stuff. Bro, what a short. And I mean, let's just jump
on the biggest market capitalization company in the world.
Bro, like no one's gonna believe us when we say we shorted here and we got out.
And before we
shorted here, bro.
Yeah, and
bro, if I told you, okay, the Monday.
And bro, I just want to say something. We did not go short because Michael Burry went short.
Oh God,
please.
Can we stop about that one hit wonder?
I just want to put it out there.
I know, he's being so wrong, bro. That guy's been shorting forever, man.
Wonder, but like,
I know. People don't give us enough credit, but oh my God, bro, what a trade. So first of all, okay, when Nvidia was dipping here and everybody was shitting on it, remember we're saying, no.
Oh, we had the
Nvidia
most
still
amazing
has
long, bro.
Nvidia's gonna get to the $5 trillion valuation. When we got back down here, remember we saw the market profile, and the market profile looked like a half empanada cliff, and we said we gotta go long. Plus, we have that Xi meeting where the market was going to speculate that maybe Nvidia was going to be able to sell the Blackwell chips to China, and the whole market ran on that speculation because that's really what caused Nvidia to get to that $5 trillion valuation. They started signing deals between themselves, OpenAI, etc. And then secondly, saying, well, I'm going to invest in you if you buy my chips. So that kind of starts like escalating all these billions and billions of dollars of orders. Then you have all this AI talk and AI hype. Add to that the fact that the Trump was going to meet with Xi, and that right before that meeting, or a week before that meeting happened, you had the whole like trade escalation where Trump said, "Oh, I'm gonna hike tariffs on China," which never happened, and everybody thought, well, Nvidia might be able to sell chips to China. And everybody ran with that story, including us, because we went long, and I was long, and I was long, and I was long, and I was long. We went long. And then we woke up one morning, and can we just say, and bro, sometimes it's okay to get lucky. Can we just be honest here? Can we all agree that the best thing that happened on that Nvidia rip is that by the time the markets open, Nvidia was already at $110. And thankfully, the markets were not open when it got to 5 trillion because we would have gotten squeezed. And that's something
Yeah,
that we don't talk about enough because originally we wanted to short 205, but the 205 happened after hours.
we got a gift. We
Remember,
got a
right?
gift,
Because
bro.
I was like, oh my God, we're already broke 205. And then by the time we open on Monday, we were already at 211.
You know what, bro? I think we deserve it for every time we got painfully hit in the face shorting a stock fundamentally that should have been shorted, but it's very hard because you get squeezed.
I
So
know,
for
but we
once,
gotta
we're
we
getting
gotta admit though, we gotta
yeah,
admit that I would have shorted 205 if the markets were open. If the options markets were open, I would
of
have
course.
shorted 205 and it would have gone 206, 207, 208,
But the
209,
fact that it
210,
went even more up, I'm like, my God, bro, like this is
six
a
dollars,
no-brainer.
bro. Not just a
But
dollar. It went $6 higher
yeah,
than our target.
it opened at 207 and it went to it was crazy.
But we were lucky because when he got to 211, we said, time to short Nvidia now. And we shorted Nvidia and we made, I think, 5x on that trade. Then we got out. Then the market rally. And then Monday, bro, this was Monday. We had our weekly strategy session on Monday. And as I'm having my weekly strategy session, Nvidia is trying to make a new high with no news at all. There is no news at all. This is seriously the the latecomers, the chasers, the people that have no idea how to trade. They come in and say, I think Nvidia at 211 is the greatest opportunity of all times. And we shorted it during the weekly strategy session on Monday. We were immediately in the money. We wake up the following day, we're down 2%, 5x, we get out. Now, bro, they went to $22.
Yeah, that's crazy.
Those puts went to $22. I think I paid like 60 or 70. I don't remember how much I paid, but this would have been a 22x, bro. The fact that we called this sell-off in Nvidia was gorgeous. And not only that, people won't believe us, but I actually went long Nvidia on Friday
Yeah.
with zero DTE calls, and I
Yeah,
made like,
and we texted each other and we're like, bro, I think Nvidia has taken enough beating short term.
you wrote it, bro. You wrote it on the Slack channel. You said, guys, at this level, what was it? It was 178. A point of control. We
You have
got
the
to the.
fibs.
I mean, you had it all, bro. You had the support. You got
Yeah.
everything.
And
And we're
that's
like,
it.
no, no, no,
That's
no.
and that September low, bro. You take the high, you're at the 61% FIV and
And
like
Nasdaq was at that 600 level in the triple Qs.
capitulation. Yeah.
I mean, everything was there, and I took that trade, and I made 2x or 3x. I forgot. But the point is that this really reminds our listeners that there are people out there trading that have absolutely no clue what they're doing. Like, bro, can you imagine waiting until this Monday? The Xi meeting already happened, and they already said we're not selling Blackwell chips to China. Powell, bro, Powell felt the urge, and I'm gonna say the urge, which is very rare from a central banker. Powell felt the urge to use the FOMC meeting and the FOMC stage, which is a global stage where everyone's watching your every word, to make it very clear that the market should not be pricing in a December rate cut. And the fact that in the September macroeconomic projections, they only gave us two rate cuts, and the fact that they already delivered two rate cuts, and the market was expecting a third one, and Powell didn't wait for the market to the government to reopen for the market to have all the data so that they could make a judgment about December. He didn't wait until 2 weeks before the meeting. He didn't wait until later on. He felt the need to tell us there that the market was wrong and they were not cutting in December. And the media, can we just talk about how incompetent the news media is? Because I would like to hear a Bloomberg journalist, a Reuters journalist, a Dow Jones journalist, CNBC journalist, Fox News that came out after the meeting and said, Powell clearly is telling us that there won't be a rate cut. Instead, they're like, oh, the chance of a December rate cut is going down. No, bro. Like, remember, I called you that day and I said, Powell just threw cold water at the market.
Yeah.
And we were at highs. So not only do you have Powell throwing cold water at the market, which usually I wouldn't be the first one to short on that, but
the interpretation is he didn't have to do it, but he did it. So why did he did it?
exactly, he did it because he felt either A, that the markets were a bit frothy, but he didn't want to say it because when he was asked about valuations, he didn't want to comment, which he usually
He
does.
never comment.
I know, but he, and he said in the past, remember, like a few meetings ago, he did bring these valuations, whatever. I forgot the exact quote, which we were debating on the Slack channel whether he meant that they were fair or they were overextended, whatever. But the fact that he didn't directly say financial conditions are overstretched or the markets are too high, instead he said the market shouldn't be pricing in a December rate cut. He also said, which was as important, that the risk management rate cuts are done. And the third thing that he said was the data that we're getting shows that the employment situation is not so bad. Which, what data he's looking at? I mean, I'm not sure, because if you look at ADP, it's really not good. If you look at the possibility of all these layoffs coming from the government shutdown,
there is a lot of layoffs coming from all sorts of corporations.
bro. I mean, one thing people forget about the government shutdown is that it's not just the government employees, right? When the government is shut down, they're not hiring contractors, and the government is the biggest business to contractors, right? Independent contractors that have nothing to do with the government. So when the government shuts down, they said, okay, your contract, we're putting it on pause for now because we're closed. So what happens to those companies? Do they lay off until the government reopens? I mean, the thing is, we don't even know. Powell says he kind of knows. I'm sure he's got a buddy at the BLS that's barbecuing, and he can call them and be like, by the way, can you give me some hint as to how the data was looking? Or can I come with you to the BLS and can we crunch some data? I mean, I highly doubt that Powell has a 1-800 number that he calls at the BLS to see if they're open or someone answers. Like, come on, like, oh, the government is closed. Like, if people think that Powell gets the data from investing.com, I mean, come on.
The Fed
Like,
has the Fed has access to data that nobody has access to.
of course. And if they don't, then I want to sell everything and close my trading account, because if they're trading out of data that comes out on investing.com, I mean, that's scary, right? That's scary. Like, the Fed needs to be ahead of the curve. They need to get previews of how the data is looking. And if the government is closed, they need to at least have conversations about how we feel the economy may be doing based on some preliminary surveys that we may have done, or some collection of data. Or I'm sure there is some emergency funding to bring in a few people and crunch out some numbers. I mean, it would be scary to think that the biggest, largest
But you know
economy in
what?
the world.
But the crazy part of this thing is we don't know how rapidly this can go sideways. Like for now, uh, I'm not gonna debate him if he feels it's comfortable not cutting. Absolutely. But like in 3 months, like we can like see unemployment rate jump a lot.
Well, I mean, bro, I mean,
I don't know.
like, okay, well, let's all be clear here. If you ran a hedge fund that follows the Fed forecast every
Oh my
quarter,
God, bro.
and everything Powell thinks is going to happen, you blew up 100 times already.
Yeah,
Like Powell said, we're going to keep rates at zero until the end of 2023. Instead, we got the biggest, fastest rate hikes ever in 2022. So you blew up
seriously.
already there. Then Powell said, well, inflation was temporary, and then he changed his mind and he wasn't. Then you blew up before there. Then Powell said, "Oh, I'm giving you three rate cuts or three rate hikes," and he only delivers one. You blew up again. Then he's saying we have this many rate cuts, and he doesn't do them. You blew up again. Like, yes, of course. I mean, we can't trust it. I think it was a combination of Powell throwing cold water at the market, which again, the market's not going to be the first one to be like, I'm just going to put on a Powell trade, because that hasn't worked. But when NASDAQ is up here, when the government is shut down, means we don't have data, and there could be layoffs, there could be economic slowdown that we don't have. Add to that the fact that the Fed is saying, well, I'm not going to give you an insurance policy in case the economy weakens. Then you're starting to feel, well, maybe buying up here is not the greatest idea, right? Maybe taking some profits, given that nothing really could.
Everything was stretched.
I mean, bro, like nothing really.
RSIs on every top 15 company overstretched.
For sure. And one sign that I like to look at is a lot of these smaller companies, a lot of these crazy companies had their crazy runs. I mean, just take. I mean, just take a few. Like, you had crazy runs everywhere. Quantum stocks, crazy runs. I mean, I mean, hello. Like, you had some of these 2 times leverage ETFs go up 654%, bro. I mean, you had all these crazy runs in all these stocks, right? And you needed a deleverage play. Now, we rode that wave. I mean, UNH, bro. Can we talk about our UNH trade? We got
Wow.
in here, we got out here. Gorgeous trade. Can we talk about Ford trade? We got in here, we got out here. Can we talk about some of these trades have been phenomenal, right? Even QBTX, even all of the quantum stocks, all of the uh, all of the quantum stocks and nuclear energy stocks. I mean, we rode the wave. And now what happens is Powell throws cold water at the market. We are at the top of the distribution channel. Nvidia reached our $5 trillion valuation. The Xi Trump meeting was a photo op that essentially involved soybeans and rare metals, maybe. And what was important, I think, and the reason why the market rallied into it was the fact that it just meant that the trade war wasn't going to get any worse. I think that's the correct interpretation of what really is going on. It's less about the trade quote deals, and it's more about at least I'm not getting a tweet that says we're going to raise tariffs by 25%, right? So I like the fact that at least that is put to bed and we can now worry about the economy. We can now wait until May to get a new Fed chairman that is going to be a lot more dovish. We can now wait it out and see, let's see what happens with AI and this and that. But the market was up here. We showed it. We got out of everything. We went cash. And this was about 2 weeks or whatever. When this happened, we had that great live trading session where I essentially said, I'm going in all cash. I
Yeah,
don't
on all,
need.
not on our long-term portfolio, but like the swing trading portfolio.
Yeah, I mean, there's no more swing trade. Everything I had went to the target. Apple made an all-time highs. Everything. I mean, with the exception of Tesla, was the only one that hasn't, and we still hold it. So we went almost all cash. But being fully cash made me very, very comfortable. And then we could really day trade. So here I am day trading these markets with futures, with options every day, loving the puts, loving the NASDAQ puts, loving NASDAQ shorts on NQ futures, loving all this volatility in the bond market, putting on some great trades on bonds, putting on some great trades on stocks. And, we rode this downtake, we rode this wave, and the beautiful trade, bro. And let's talk about this trade. We are now down here.
I mean, you can go back to Thursday. We did it Thursday too.
Yeah, so we did the Thursday trade. So first we had this bounce on Thursday, right? And I thought Thursday really was gonna rip more, and it didn't. And then we had this big dump on Thursday at the close, near the close. And then consolidation down in the European session. And then big down on Friday. And bro, after 500-point drop, let's talk about the 1 hours. After a 6% drop in a matter of week and a half, bro. You have a 6% drop in a week and a half. I mean, in fact, you have a Monday. You have a 6% drop in a week, bro. 6% drop in a week. In a week. Okay? And we were short like NVIDIA. Yeah. We could have made a 22x on NVIDIA. We only made 5x. The fact that we're saying we only made 5x is crazy. Because right now we're talking in terms of, 4x is nothing. Because we're getting 22x.
Seriously, yeah. You double your money and you're like pissed off. Like, bro, what a bad day today. I just doubled.
Friday, exactly Friday, right? So imagine being the trader that waits until the market drops 6%. Everybody, the market.
It's like, now I feel comfortable, bro, because it looks like a downtrend. It's going to break the trend line. I think it's the perfect time to go short.
Overextended on the RSI, massively overextended. We are at the bottom of the channel. We are at the point of control. The perfect trade. And I posted that on Slack as it was happening, as you were contributing. And we're right at the point of control. We're right on the trend line. We are at RSI is overextended. We had that 6% drop. We were the one shorting the top. We were the one that capitalized on the whole move down. We were the ones all cash shorting this market. My neighbor says, finally, the market is going down. We are short. We've been short all this time. We got massively squeezed. Now we're mega short because finally it's happening. When that happened, bro, I couldn't wait for the market to open. Now the market opens. We have this big uptick followed by a big downtick. And then it's just capitulation, bro. Traders don't panic to get into a trade. Traders panic to get out of the trade. What we saw on Friday was complete panic. And panic. And they were selling and selling. I remember we were texting each other, bro. And we're like, 500-point drop on Thursday. Now 500 points today or nothing. There was nothing. Now the market's overextended.
Sorry to cut you off. When you have that kind of chart downtrending, somebody important market moving got assassinated. You had somebody from the Fed very high up, like the New York Fed, the vice president, or Powell saying something crazily hawkish,
There
market
was
moving.
nothing,
There was nothing. Like you
bro.
would
There was
expect. Okay, if I'm gonna take your quote. If I wake up from a coma from 9 o'clock in the morning and I wake up at 11:30, I'm like, what happened? Did Trump get shot? Is
exactly,
did Taiwan get a bombing? That's
exactly.
what I'm thinking. That's what I'm thinking.
I
First
know.
of
It's like what exactly. And I was looking everywhere. We have the squads, we have the news, and I'm like, there is no, like, there's nothing new, right?
and
The
combined from
media,
the fact that we went already down and
six
down the
percent,
last
and we went
exactly
to the bottom of the trend line. And the thing is, bro, if you read the news that day, everyone was negative. Oh, this guy
everyone.
just showed it. Oh, the market's gonna crash. Oh, this, oh, that. AI optimism, the AI bubble burst. We're now crashing. And I'm looking at it thinking, we were the ones shorting the top. We were the ones cashing out when Nvidia, and it's crazy how bipolar the market is. And this is something that in my 26, 27-year career, the bipolarism of the market, bro. It's like you wake up on a Monday and you're at a $5 trillion valuation on Nvidia. Nvidia is signing all these deals, hundreds and hundreds of billions of dollars, and Qatar and Stargate and OpenAI and this and that and Optimism, blah, 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 blah. By Friday, all the AI bubble bursts were going lower. It's like
Seriously, yeah.
bipolarism, bro. The
Seriously.
market is going from one extreme of greed to one extreme of fear in a matter of 3 or 4 days. It's like you're not even giving the market enough proper reason. It's just
Seriously.
sentiment.
205, Trump meets Xi. Great time, bro. Unsecurity gone. Great time to go long Nvidia. Nvidia 179. Oh my God, bro. Nvidia is a bubble. Michael Burry just shorted an Nvidia. I'm getting out. I'm taking my stop loss. Wow.
Unbelievable. And what we're seeing right now in the markets is this sentiment driven bipolarism, where you're going from extremes in terms of AI, robotics, automation, and everything is going to be ultra productive, deflationary, money printing, new Fed chairman, low rates for longer, Republican government with market friendly policies, deregulation, market won't stop, won't stop, won't stop, right? To oh, we're too high. Some of the earnings are weak. Some of the companies beat, but that wasn't enough. Big moves down. We saw that 10% drop on some of these stocks, right? And we're like, wow, big drop on all these big companies. And
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 yeah,
and, and it's
Palantir,
great.
bro. Palantir beat, bro, and they went down, but
But
it's very,
we're not even seeing downs. We're seeing like mega cap stocks go
yeah.
down 10% over
And
just sentiment. I mean, that just shows you the bipolarism going on. And for us traders, this bipolarism is great because as the fear gets to extremes, as it was at that beautiful 11:30 a.m. when all of a sudden Slack and our Slack channels, bro. I mean, can we just talk about for 1 second how you hear about this $1 trillion companies? You hear about, you know, the biggest companies in the world, Nvidia, $5 trillion valuation. When you hear about the biggest hedge funds in the world, when you hear about all this money and 401ks and people investing and this and that, and our Slack channel has been so spot on, always. That is just so unbelievable to think that in our Slack channel we were cash, on a Slack channel we were short, on a Slack channel at 11:30 on a Friday, it's just going kapoom, kapoom, kapoom. The first thing is like, guys, take a look at Nvidia 179, boom. Then you and I have a conversation. It's like, bro, this is just panic selling. People panic to get out of the trade. Then as it gets close to 600, we're now going in on a Friday and saying, let's go
but you know what,
long
bro?
zero DTE $600 calls. I mean, that message on Slack. And
But
then
you know what? You know why we're so confident, bro? It's because we pass so much time in front of the computers. And every time we have a mega short on a mega macro fundamental idea that, okay, we really need to short, and I don't care, we're shorting every squeeze. What do we say at the end of the year? At the end of the day, man, I'm tired, bro. Man, I'm beat. Man, these squeezes were killing me, but I had to continue short. I was offside. I was adding. I was adding. I was adding. I was in pain.
For
For the
sure.
last 3 days, I've been getting squeezed. I've been getting squeezed. I've been getting out risk management. And at the end of the day, like our gold short, bro, the most recent trade is our gold short. When
Exactly. It
gold,
was very
so
difficult. It was very
so
difficult to short it, and it was the right thing to do.
so
This time
imagine
the market
when
goes down thousands of points.
and so for us, that was our logic. It's like, man, the market cannot go down like this, bro. If it goes down like this, there's a black swan event happening. Something
And
is gonna
people
happen,
are
man.
and people are just panicking to get out. And we posted it on Slack. We said very
And that's why
clear on
we're
Slack.
so
It's like
confident, man.
we said after a 6% drop on the trend line, RSI overextended, and we get now we talk about the fundamentals. We're like now the market can actually look forward to something. We can look forward to reopening of the government. We can look forward to good news from Nvidia, right, coming up. We could look forward to new things that we couldn't look forward to before. When Nvidia was trading at $5 trillion valuation in our strategy channel, we said at a $5 trillion valuation, everything has to be perfect. Nvidia, there is no wiggle room. And you made it. You made the analogy of buying a condo. You buy a house that was built in 1950, and you know you're gonna have to repair the AC. You know you're gonna have to change the doors. You know the plumbing is old, and that's what you're buying. If you buy a brand new house and the switch flickers a little bit, you're complaining because you're paying the price of a new house. It's the same thing. When you're paying the price of Nvidia $5 trillion, everything has to be perfect. What does that mean? Below $5 trillion, if there's competitors, it's good. Competition is good. At $5 trillion, I'm worried about Qualcomm. I'm worried
And
about
what has
Huawei.
history and what history shown us, man? History has shown us that during the year there's hiccups, man. There's hiccups. There's
At a
macro.
$5 trillion valuation, I have many questions. I want to know Qualcomm chips. I want to know Huawei's plan to take over Nvidia. I want to know if China at some point will be allowed to buy Blackwell chips. I want to know if the mega cap spenders, the hyperscalers, if they're even going to be able to continue
Yeah,
to
exactly.
finance all of these
Us as
purchases.
investors in that company, we want to know, like, how is my money safe here? What is the risk that I'm taking?
Are the
Like,
margins
my
going to
money.
stay the same?
Exactly.
At $5 trillion, I want to know if the margins are going to stay the same.
Seriously.
Below $5 trillion, I don't care. Margins are going to go down a bit. It's okay. At $5 trillion, you better make sure the margins are staying. You're making sure sales continue to grow. You make sure the hyperscalers continue to spend. You make sure that hyperscalers don't blow up. And we talk about the potential of off-balance sheet debt, right? How a Meta borrowing off balance sheet to be able
Private
to
credit.
finance all these chips.
Yeah.
Are we going to have a situation at $5 trillion? I want to know if we're going to have a situation where we have all these chips that are not used either because there are new chips that from somebody else, or maybe we overspent, or maybe we became more efficient, or maybe something else. Now at $5 trillion, I have those questions. And that's what we shorted. And we shorted because those questions haven't been answered. And you don't deserve to have a $5 trillion valuation until those questions are answered. And there's so many if, right? At a $5 trillion valuation. So we shorted the market. Let's talk about two trades, bro, because it's so important here. Can we talk about what in the world was going on Tuesday? What was it, Tuesday? When did we have a 1,000 tick trade? Yeah, it was Tuesday. Tuesday.
Oh, yeah. Because
So
of
so we get this
the
New
votes.
York, New Jersey, Virginia. We get these mayor races, okay? And the market's fully priced in for Mandami to win. Yet the market starts freaking out about New Jersey, Virginia, New York. Bro, the market is selling off. We go in and say, Let's load up. Let's go long. We have a mega long trade, and that was a beautiful trade on futures, which I destroyed it. Then we come back down on the Thursday. Then we come back down on the Friday. And then we are right here on the Friday at 600 on the triple Qs. We're now starting to question who's selling now. We go long, we put a slack alert, and we said, wait for the flush out. We did make fun of it. We say, whoever is shorting here is going to be served on a poutine and is going to be sad. Who in the world, bro, is shorting here? And you know that if anybody really wants to short the market, they don't short down here. They wait until there is a rally and they short the rally. They wait for liquidity. People don't panic to get into a trade. People panic to get out of the trade. We are right here, someone shorting on the trend line, on the RSI overextended, on the point of control, or a 500-point sell-off after a 500-point sell-off. And then we go along the 602 call options at 88 cents. We now have an inverse head and shoulders with a target of 605. And we said we're going to get $3 premium. Get out. What a beautiful trade, bro. What we did not know is that there were going to be rumors of the government potentially reopening, some kind of deal being put on the table. This, bro. Oh my God, was
Yeah, unless
this,
you have Nancy Pelosi on speed dial, bro. Good luck holding that, man.
bro, was this not painful, bro?
And looking at crypto, bro. I don't want to deviate from the trade, but like just looking at crypto, we're probably gonna get some news on that.
Oh my God. What? There, yeah,
Oh
of
yeah,
course.
we're gonna talk about
Government
crypto because,
reopening.
huh?
Government reopening, bro.
For sure.
And it's funny because the market doesn't even know how to trade the government reopening. And for someone like me that's been trading this for almost 3 decades, bro, like we never talk about shutdowns. We never really care. But it's funny because like the news media pretends that they figured everything out just looking at what the market is doing, and they pretend that that makes sense. They're like, oh, gold is up and Bitcoin is up because the government shut down. But then the Bitcoin is down. It's like, oh, it's down because risk assets are being sold off. And then if Bitcoin is up, they're like, oh, I guess Bitcoin likes the fact that the equities would like the fact that the government is going to reopen. It's like they make no sense. Like you could find a story on Bloomberg saying Bitcoin is going up because the government shutdown is good for alternative financial system assets, safe havens like Bitcoin. Oh, Bitcoin's a safe haven now, according to you? Oh, Bitcoin is down because NASDAQ is down. Or now Bitcoin is up because something is up. And then you see Bitcoin down,
Bitcoin
gold up.
and then Bitcoin rages like institutional flows have stopped recently, blah blah blah. Less interest.
The best, bro,
I'm
is
like,
when
come on,
Bitcoin is
man.
up, when Bitcoin is down and gold is up, and they don't even know what to say. Like journalists
Yeah.
are like, let's just say that Bitcoin is, I mean, it's just hilarious, bro. Like, can they just retire? Can the traditional news media just retire and let AI take over already, bro? Like, these kids have no idea what they're talking about. Like, we should really only have 5 journalists in the world, and one should be
Nick Timiriel.
Nikki Leaks, and all his job should be is wait for that email from the Fed and post a tweet. That's it. And you have a job. We'll pay you whatever we pay you. Can we have like people like that ETF Eric guy from Bloomberg, at least to keep us on
Altrumas,
top of
yeah.
ETF filings? Then
Yeah.
can we get that Chinese Wall Street Journal correspondent just to get the China side of all the stories?
And
And can we get
the other one for all the Anis.
Eric Blaise, yeah, from Bloomberg? Can we just get him for oil stories coming out from the Middle East and OPEC? And then can we
Just
have
keep
just a fifth one, scoop guy for Nvidia and Apple, and a government scoop guy? Like the government
oh,
is taking
Dan Ives, bro.
yeah, like the government's gonna take a stake on quantum stocks, or there's gonna be a 10% tax on Nvidia, like something like that. That's what we need, bro. We just need five.
Everything else get fired, bro.
Yeah, everybody else just AI, just do market recaps and tell me what I missed if I was at the pool. That's it. because they have no idea what they're saying. They have no idea what they're talking about. But now, when we talk about the beautiful long that we had, bro, it was so hard psychologically. But I did have that call on Sunday where I talked about it, and it's important to talk about it, bro. And I figured it out. We bought them at 8 cents. They went to $10. I don't think we could have predicted that, bro. The trade was really getting at the 205s, bro. 605s. I mean, this rally was so painful to watch, bro.
Even
So
from
painful.
even from the structure of the option chain, 605 was the right call.
And bro, like the minute we got out, and the thing is, IOTAF all got out.
Because
So we
we gotta take, because there's market makers involvement. And unless there's an institutional push, a hedge fund push, somebody knows something and is putting big size, like, man, I'm sorry, bro. Like, as good as we are, we're not insider traders, bro. We do not get privileged information. We don't know. So we have to assess risk.
So
And
it's
at a
so
point,
unfair because the minute we got out, bro, the minute we got out, the market retraced and we're like, wow, perfect out. I was done. And
Yeah.
then to squeeze, to squeeze, to squeeze. And I'm looking at all this call, bro. I had 602s, 605s, and 610s, man. I pay like less than 9 cents.
This, you know what? This is like being on individual stock. You have your option position, you get at your target, and 2 days later, they're up 2000%. And you hear that they just got acquired for a crazy premium. And you're like, if I had just forgot about my options, but what can we do, man?
So now, looking forward, bro, I mean, the government's going to reopen. We're going to get a lot of data. That's going to be very interesting. The data is good. Fed not cutting. I mean, is that even so bad? The data is bad. Fed will have to cut. Are we going to get easing?
You know what, bro? I think we got to give a little bit of leeway to the Fed. They did stop their balance sheet, bro.
I know. And yeah, so exactly.
And
right?
very
So,
smart and very smartly, because of the repo markets were like at zero, like they were completely drained. They acted quickly. Remember in 2018 when the repo markets were drained and they were still doing QT, the market freaked out. They had a little tantrum and they adjusted pretty quickly. So the fact that they were super like on top of the ball on that, we got to give them a little leeway on the fact that they're like just saying, no, December, like we don't, it's not a foregone conclusion.
so bro,
And
now can we
anyways,
talk? Yeah. So can we talk about bonds? I mean, when you think about it, right? We are going to get a new Fed chair in May. This new Fed chair is going to have a third mandate. We all know it, right? Keep borrowing costs low. Why? Because the whole U.S. economy relies on debt. And can we just say it? Like, it's okay. Like, it's okay. The U.S. economy, real estate, commercial lending, whatever, auto loans. I mean, we saw what happens when there's a little bit of a tantrum in some markets, whether it's private credit. The private credit side, the size of the private credit markets is dangerous because we're talking about riskier projects, which could be similar to subprime. And everybody was chasing those 12% returns on private credit. Can we talk about the subprime in the auto market with some of these lenders going bust, even though at smaller amounts? But the U.S. government, and this is something that we learned from Besant during the April tantrum, that the Trump put, the Besant put, the Fed put, was not necessarily the stock market, although it is really the bond market. Because the U.S. economy in massive amounts of debt. And Besant made it very clear, I want to see 10-year yields lower. Trump wants to see 10-year yields lower. The Fed now is saying, we're stopping QT, we're gonna reinvest.
They're really proactive, preemptive on everything that's with fixed income right now.
So the Fed is telling you we are going to reinvest everything into treasuries. The Fed told us we're gonna have a Fed's balance sheet that is treasury only. Wait a minute. The Fed still owns trillions of dollars worth of mortgage-backed securities. So does that mean that we're going to get a bunch of money going into the treasury market? Yes, that's what it means. Then we also have the Genius Act, where all these stable coins, which by the way, all the major banks are adopting, have to be backed by treasuries, have
Yeah.
to be backed by US dollars, which,
And that's
as
another
we
bid.
know, being backed by US dollars really means being backed by treasuries because nobody keeps money in US dollars. It has to
Exactly.
be US denominated treasuries. So the demand is coming from the Genius Act and the stable coins. The demand is coming now from the Fed, which has to move away from MBS into treasury only. This is now without QE. Let's wait until the economy really slows down with a new Fed chair. We're going to do QE. That's going to bring another bid in the market. And then the fourth part is, well, Bessent and Trump want lower yields. So now we have a few interesting candidates to be the next Fed chair, and you like one in particular, right?
Yep.
Funny enough, we have this fixed income guy.
CFO of which company?
I think it's Black.
BlackRock.
What's it? Black? Is it BlackRock?
BlackRock? This is BlackRock? BlackRock, bro. Rick
So when you
Reader, bro.
think about it, funny enough, we have a person here that knows about fixed income
Everything.
markets
Seriously, man.
that will be given one task and one task only: bring down yields. Now,
And
all
can
you
we
need,
can we say, bro, if like you're writing a script for the next 6 months and you have like interrogation, who is gonna be the next Fed chair? And you're like, well, Rick Reader seems like a pretty good candidate.
and bro, not only that, but because I'm a bond trader. I'm a bond trader. And I traded bonds 3 decades, almost 3 decades. And as a bond trader, as a treasury futures trader, short-term interest rate derivatives trader, I've always realized that when it comes to bonds, you can't definitely not listen to anybody because bonds have a mind of their own. And when they say, oh, yields shouldn't go lower because of inflation, this and that, like, are they out of their mind, bro? Europe had negative rates for years when the US was still not negative. The US never went negative. So we're
Negative.
going to talk about a bond market. Please talk about Japan's bond market and their negative yields for the
Yield
longest
curve
time.
control for the 30 years.
Yield curve control, where they were literally keeping yields low. Let's talk about Europe and the ECB essentially buying all the government bonds, monetary. I mean, come on. If anyone's bad, it's been Europe. If anyone's been bad, it's Japan. All of a sudden, it's like, oh, they couldn't. Of course they can. They can bring yields in 10-year yields back down. Now,
And what about China, bro?
I mean, what
China
would be the
literally,
problem?
China literally at every day at 7 o'clock, bro, they tell you how much their currency is worth.
So what is the problem with lower yields? Nothing. Lower yields reduces the amount of interest that the US government has to pay on their debt to foreigners, as well as obviously domestic holders, but to foreigners, there's nothing wrong with that. Secondly, lower yields brings borrowing costs. Borrowing costs keep the economy healthy. Third, lower borrowing costs is more money in our pocket. Consumers have more money, they're wealthier, they can invest, they can do other. So what's the problem? There is no problem. So why are we not all in on lower bond yields? I mean, there's nothing wrong with lower bond yields. I don't even understand why
And
anybody
and
would be against it.
and Moran has been advocating, like he had like couple of speeches where he's been advocating a lot that there's less immigrants, less need for housing, so rent is gonna go down. So that helps the super core. So that big part of the super core that the Fed was obsessed with the owner's equivalent rent back in 2023 is gonna be like sharply continuing to go down. So at the end of the day, it's like you say, yes, inflation will go higher, but it's the rate at which it goes higher that's important. And with these
And
tariffs,
and we haven't
they're
even
predicting
taken
a
into
one-time shock.
account and we haven't even taken into account productivity gains from AI. That will be deflationary. What happens, bro? And this is something that people are completely forgetting about the bond trade. Bonds, first of all, are at the lower end of a big sell-off. This is what people are forgetting. Obviously, we're here is at the top of the COVID crisis, but we've have had a big sell-off in bonds, especially long duration bonds. Part quantitative tightening, part the fact that QE disappeared, blah blah blah. There was inflation. Everything was bad. The Fed wasn't there. No longer was the Fed not there. The Fed was actually letting bonds mature and not reinvesting, so shrinking the Fed's balance sheet. There has been inflation, and there has been massive amounts of spending globally, the UK, other countries that are freaking out the bond market internationally. So you could argue that you really had the worst of the worst. You had inflation, you have the end of massive amounts of QE globally, quantitative tightening, and you've had a resilient economy. And on top of that, you have massive amounts of government spending, whether it is to subsidize wars or the economy post COVID, massive amounts of government debt, fiscal spending out of control. I mean, that is the worst case scenario. And that's what we got. Now, the Fed's balance sheet shrunk by $2 trillion. $2 trillion. Second, government spending may get more in control after the freakouts in the UK and Japan, whatever. Third, can we finally get the massive amounts of productivity gains that we've been waiting for with AI and get a massive deflationary trend that will look at Japan's deflation look like nothing? Can we get deflation? And what happens to bonds? What happens to bonds if there's deflation? Oh my God. What
Think,
happens to crypto if there's
no, but
deflation?
no, but think about this, man. These 3D printers. Imagine like once we're gonna like be so good that you can literally print a Ferrari. Think about
Bro,
that.
but it's happening, right? And
Yes, yeah,
all
but
these
think
layoffs
about
that
but
challenge
think
it, that
about
challenge.
when but think about when everything is gonna be 3D printed because I believe some at a point everything is gonna be 3D printed. Think about that, man. Like
Bro, even
people
even
people
marketing.
looking
I
long
mean,
term, like at these yields, you're not jumping on if you're a pension fund at these yields, bro, in the US.
bro, what's gonna happen when you're paying $100 million in marketing to some company and you realize that you can just introduce some AI marketing tools and you have better understanding of consumer behavior, better understanding of automation processes, reducing costs? Like, you really think there's no companies out there that are going into a manufacturer and saying, with AI, robotics, automation, I can cut costs by 20%, which you can pass on to your consumers? Can we not talk about how cheaper everything is going to be? And not only is everything going to be cheaper, but then we'll start getting into a situation of what happens if the real electrification of things causes oil prices to collapse, right? Then you really have no inflation pressures. I mean, at that point, you're having layoffs, which brings down average hourly earnings because there is no supply constraints on labor, right? So employees are going to be like, I don't want a raise. I just want to keep my job because I don't want to be replaced by an AI robot. Instead of, can I get a 10% raise? And they'd be like, well, maybe we'll just replace you with a robot. I'm like, no, actually. So lower wages. Can we talk about higher productivity, lower wages, lower oil prices, right? Where we could have massive amounts of production coming from the US. OPEC has been increasing production. Now they're kind of increasing it less. If we get an economic slowdown, even for a short term, would bring oil prices lower. You get this deflationary trend that no one talks about. And the bond market is here, bro. Like, when you look
No,
at
no,
it like
and and
this,
and and what did you say? You just said like 5 minutes ago, bro, that you shouldn't listen to people talking about bonds on macro. What are people saying, bro? That we're careful cutting because we do not want to reignite inflation. I'm
like,
like,
can
yes,
we talk about the
short
fact,
term, short term, 6 months, 1 year, sure, bro. Like, I believe you, blah, blah, blah.
like, this
But
is
we're
this is
talking
what,
about the next 5 years, 10 years.
bro, it's like, you know what bothers me, what annoys me is that how ignorant people are, okay? And there was inflation because the Federal Reserve, the European Central Bank, the Bank of Canada, the Bank of Japan, the Bank of England, the PBOC, the RBA, all
Flooded.
printed trillions and trillions and trillions and trillions and trillions of new money, chasing the same amount of goods, same amount of real estate, same amount of stocks for years after the pandemic was over. And they made a mistake. They kept the money printing machine going too long, which caused inflation to skyrocket. And that inflationary wave is over. Can
We got hey,
everyone, please, can journalists just not be recent graduates from
bro,
university? Can I have,
you're over 40 years old, bro. When was the last time you were flipping cars, bro?
bro, can
When
I,
was the last time a picture, bro, of a rock, bro, was worth millions of dollars?
bro, but
Like,
can we talk about there has not been inflation for decades? I mean,
exactly.
inflation was dead until COVID came, and COVID caused money printing too fast when the economy was not only recuperating from COVID, reopening. People have excess savings. They had trillions of dollars of excess savings. People didn't travel, people
And let's
didn't
not
spend.
forget, 2019, bro, we're like already at historic lows in unemployment rate, bro. Trump
And
was
the
doing
Fed did
super.
QE.
Yeah.
That's how, and they're complaining about inflation. 2019, summer 2019, the Fed cuts rates by 50 basis points. The Fed engages in new money printing, which he doesn't call a QE. And then COVID happens, and then they do more QE and more QE and more QE. And that's just the Fed, the Bank of Canada, the ECB, the BOE, the BOJ, the PBOC, the RBNZ. I mean, everyone does QE. The economy reopenings.
And
Everyone has excess savings.
and
You have excess
I'll give you the
savings.
perfect and sorry I'll give you a perfect example. Take real estate agents. You call the real estate agent during COVID. Yeah, I'm interested in buying a house. Okay, how much overpriced you want to pay for it? Because it's listed at 500K. Are you willing to go 150 overprice? Now call a real estate agent and it's like, oh yeah, yes. Do you want me to take out you for dinner just before visiting the house? That's how like desperate people are to sell houses.
Bro, I was looking for investments at a condo in Montreal, and there was a lineup for the open house. I swear to you, the real estate agent came out as we were lining up to go see this condo. This is an average condo in the South Shore, like nothing crazy. And I swear to God, you know what the real estate agent said? Said, by the way, if you're not going to offer at least 10% above asking, there's no point you looking at the house because we already have 4 offers. I walked out. I'm like, I'm not buying this.
Yeah,
But
it's not a deal. Yeah.
the Fed and everybody printed way too much money, excess savings, consumption that came in all at once. You have supply chain disruptions. Of course, you're gonna have. You
You
have a
had no
Fed that
cars,
says inflation
bro.
is transitory.
You had no cars available. You wanted to buy a car, bro. Oh yeah, I want to have my winter tires included this and that. The guys laugh, bro. I don't have any
Bro,
cars.
used cars were more expensive than new
But
cars.
exactly. So you're going there negotiating it because you're used to doing that, and they're looking at you. It's like, bro, I don't have cars. I don't have
Bro, there
house.
were no tiles. I remember I was doing renovations on a property and there were no tiles. And the guy told me, well, I have tiles coming in. I have 5 people that want them, contractors. If you want, I can increase the price a little bit and you can have them. And people were paying. So
Yeah.
my point is, this temporary inflation that really happened post COVID was due to money printing, due to excess savings, due to supply shocks. And then everybody complains. Before that, there had not been any inflation for decades because China and other countries have been exporting deflation. They've been producing cheaper. Secondly, with productivity gains now from AI automation and robotics, globalization, there won't be inflation. Can everybody just forget oil prices are not even at $100? Can we talk about there is no inflation pressure, there is no supply chain disruptions, there is nothing. So why are people even talking about inflation? CPI keeps on coming in lower than expected. The Fed is like, well, actually, inflation is not even here. We haven't even had the deflationary uh, trends from productivity gains. Bonds are here. Bonds are here. Are you out of your mind? The Fed shrank the balance sheet by $2 trillion. The ECB is no longer doing QE. No one's doing QE. And all of a sudden, we're thinking, well, wait a minute. What happens if there's deflation? Bonds would skyrocket. So,
Exactly.
so that's why we're long TMF, bro, and crypto. And now Nasdaq, bro. I mean, we bounced off the trend line. Can we now? It's November, bro. I think the new Fed chair is a bigger deal than people think. And I really believe that the new Fed chair will come in with a Fed not as independent as before. And that has huge market repercussions. If you have a Fed member that is technically married to the president. Are you gonna have a situation? Hey, how's it going? The new trader. We're gonna have the new trader. Are you teaching her how to trade yet or what?
Loves it, man. She can spend the whole day with me looking at the screen, just like, oh, why is it doing this? Why is it doing that?
That's amazing, man. I know kids are better. Like the other day, I was short, and my son is like, "Dad, were you short? It's already going down. It's already went down too much." And I'm like, "You're right." And I got out, and he bounced. But I mean, can we talk about? I mean, it wouldn't be crazy. And this is something that I hate being like buy the dip, buy the dip. We bought the dip on Friday, but bro, I mean, we have a plunge protection team.
Oh, the Trump
What?
put is on, bro.
I mean, let's just run scenarios here.
The article that I posted, like, the Senates have what did it say? What did it say on CNBC? Like, we never what did it say? Talks to end the government shutdown take a promising turn. Since when we'd heard that from the Republicans?
Exactly. So you have, yeah, of course you're going to reopen the government if the market it goes down, but you're going to have Powell would also start cutting rates again if the market goes down, and then all of a sudden, have we forgotten that we have a Trump put, a Besson put, a Ludnick put, a Greer put, a Powell put, and how can the market under Trump be allowed to go down? I just don't see it. Even if there is some reason, whatever, I'm not even interested to know the reason. But even if there is some reason, I just don't foresee, unless it's a shock, a black swan event. I just don't foresee anyone letting it happen. So now the question is, what happens next?
If the economy slows down and the Fed stays stubborn, Trump is going to put so much political pressure on Powell. And if that doesn't work, the market is going to force Powell.
And bro, and the thing is, the Fed's
The
balance
market
sheet
risk product, bro.
the Fed's balance sheet has a $2 trillion ammunition. Let me just put that into perspective. We can close this up. The Fed's balance sheet is like a machine gun that is fully loaded. $2 trillion were wiped out, which means that they could be redeployed. And they could go more, they could go four, they could go five. The whole economy could collapse, and the Fed just injects $2 trillion into the market, which immediately goes into bonds, immediately trickles into the real economy, and it trickles into the stock market. You resuscitate any economy from crashing, any economy from crashing, right? And that's why it's so difficult to stay short this market, because as much as we want to believe that things are too high, in the grand scheme of things,
it's easier to short on overextensions than to stay short.
100%. As long as we get these retracements that happen 6% in a week, it's almost like mental reset. And I'm okay going long again. It's like constant reset. It's like everything gets too crazy, and then you get Nvidia drops 10%, and you're like, okay, you know what? Maybe I like this again. And then let it rip again, and then you get out, and then it comes back down, and then you get back in. It's just so difficult to foresee.
We may have a period of a long range until we get the new catalyst, which is going to be the next Fed chair. Earning growth at these valuations, bro, is not looking promising. But why would you short it just because of all those reasons you said? The puts, Trump put, Besson put. No,
I mean,
I
if we
completely
put
agree,
it
bro. I completely agree that we are gonna grind up higher.
now, let me
And
put this.
once we go grind up higher,
Let me
and
put this
Nvidia,
stat. Let me put this stat. Okay, who is the most pro-business president we've seen in a very,
oh
very long
God,
time?
Trump by
Okay.
far, Trump by far.
Who is whining and dining with the biggest, richest people in the world?
Besson has everybody on speed dial, bro.
Who is always showing up? Who was behind in the Fed in Trump's inauguration? Who was all there?
Every CEO, including
And their
Prince Charles,
girlfriends.
and everywhere. Exactly, bro.
Okay. Who is pushing the Fed to cut rates and do QE?
Oh Jesus Christ, bro.
Okay. Who is just pumping the economy and making the US economy be a business?
Yeah, the administration, bro.
And we're only up 21% since Trump took office. And I say that because if you told me that the stock market doubled in Trump's term, would you be surprised?
No, no. How
Like
can
if
you?
that
How
was the
can? How
stat,
can?
if
How
like
can?
if it's 2028, it's 2028, and Trump is saying goodbye, going to Mar-a-Lago, and there's a statistic that says under President Trump, the stock market double,
No.
Bitcoin quintuple. Would you be shocked?
I'd be.
Be-
I'd be mad if it didn't double, bro.
okay, because let me remind you, and we'll close this up, that during Biden, okay, let me remind you that during Biden, okay, so if we take a look at Biden's term, which started, so okay, so
January 25. January 21.
exactly. So under Biden's term, okay, until Trump began his term. Let's call it Trump got
Yeah, but that
elected.
that was
Trump
the
got
Trump.
elected.
That was the Trump push.
Yeah, so let's call it ever since Trump got elected. Okay, Trump got elected. Okay, so
Give him that little high before the downtake.
yeah, okay, so Trump got elected. So
Now
December,
that high, yeah, that's the one. Everything else was a Trump premium.
okay, yeah. So here we go. The market went up 61%, and these are the Democrats. Okay,
And this is Democrat spending and a floodgate of money.
so 61%, right? Yeah, we get it. It's yes and no. It was a floodgate of money, but it was also the fastest rate hike cycle we have ever seen, the fastest rate hikes we have ever seen, the biggest rate hikes per meeting we have ever seen. So yes, there was a lot of money printed, but there was also a lot of tightening
Chaos. Yeah.
and a $2 trillion quantitative tightening program, $2 trillion QT program, and the market still went up 61%. So why is it crazy to think that under Trump the market couldn't double 100%, which is only 40% more than Biden, and that's what, and we're only at 20%. So yes, the market could double over the like we still would have. We're only up 20%. We still have 80% technically, which is crazy, bro. So that's my point. Okay. Now I like these overextensions. I like these downticks. We're having a lot of fun, bro. I'm happy we have the Market Bros podcast again.
100%, man.
Can we talk about crypto quickly here? Can we
Oh yeah.
just say that everybody wants crypto to go to the moon? When is it going to go to the moon, bro? Tell me when it's going to go to the moon.
When the next Fed chair will be announced.
And
Basta.
by then, who's going to be beyond loaded?
Oh my God, the Trumps, bro.
And everybody
Best
else?
and everybody else. And
Exactly.
everybody's gonna get a pardon.
That's it.
Biden's son had a pardon. Fauci had a pardon. Everybody's gonna get a pardon.
So here's how you are worth 200 million, 200 billion. You
Mr. Trump
accumulate,
Jr.,
tell everybody on Twitter to buy.
yeah.
On every dip, say buy, 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 buy. I'm buying, buy.
I told everybody to buy.
Be completely transparent. Set up a company that raises money just to buy Bitcoin and Ethereum, and follow the trend line. Follow the trend, and on every dip you buy, and let everybody chase the downticks. Let everybody get out of liquidated, and you buy, 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 and then the market gets to a new Fed chair with lower rates, QE, and before you know it, bro, again, if I told you that when Trump finishes his term, the most Trump, the most crypto president ever. If I told you that, if I told you that ever since Trump got elected, Bitcoin, Bitcoin went up let's call it 371%. Would you be shocked?
No.
Of
And
course.
and after that, bro, everybody's already been loaded, and you're gonna have another halving.
I mean, what is gold? Why does gold get to have that crazy run? Why? And for those of you who obviously we haven't had the podcast for a while, but bro, what a trade with gold.
Gold is worth 20 trillion, and Bitcoin is worth 2 trillion. And you
And
tell us
why does gold get this, bro? Why does gold get that? Because people can't line
there's
up to buy gold. Bro, people can buy crypto from anywhere in the world. We need this in crypto, and this
just the
will only
transactional
happen.
value. The transactional value, it just makes no sense, bro. The divergence between the
This is
value.
going to be May. This is going to be May 2026. New Fed chair, which is going to be crypto. And you know, we're going to be there, bro, when the new Fed chair makes the crypto comment, makes a QE comment, and it's just like Bitcoin's just going to double. And everybody's going to be like, oh, I wish I had a shakeout. And then when you have 20% shakeouts, 30% shakeouts, 10% shakeouts, no one likes. I love Solana as an example, bro.
I heard that guy that like posts video like he's a retired plumber, and he said that Bitcoin, because of the chart, is going to the 40K level because the bull cycle is over, bro.
Bro, I'm going to tell you when neighbors, friends that don't know anything about trading texted me that Solana was going to 500. Right here, right here, right here, right here.
Seriously.
And I'm going to tell you when they told me that Solana was going below 100. Here, here, here. It's like you have this downtick, and everybody all of a sudden doesn't like Solana. 45% downtick.
I've heard Bitcoin going to 40K in the last 2 weeks.
And then
I'm not
nobody
gonna say
wants
any
to buy
names.
it. And then when Bitcoin
Yeah.
is making all-time highs, everybody wants to learn about it. Everybody wants to hide. Anyways, bro, nice catching up with you. Great week. Let's catch up every week. The market
Yeah,
bros.
and talk about our trades, man, because we have amazing trades every week. This especially, and yeah,
All right, guys. See you guys later.
ciao.
Bye.
Marco, we still talk or?
All right, guys. See you guys later. Yeah, just DM me because we're on
Okay,
the
good.
live chat.